Have you ever wondered how world events like geopolitical tensions or big company announcements can send shockwaves to the stock market? Well, today in this video, we're unveiling the financial market's reaction to real world events. We'll go from the Nvidia surprise earnings dip to the oil price roller coasters that are definitely driven by some of these international conflicts. Then we explore how some of these factors are going to really influence your investments going forward. Get ready to transform that uncertainty into a strategic advantage in your investment journey so you can feel more confident and more in control. Let's get to it. First and foremost, let's underscore the importance of earnings reports. When a company like Nvidia or Netflix goes ahead and unveils its earnings, it's going to offer us a snapshot into the financial well-being of that company. It's going to reveal the revenue and expenses over one quarter. These reports are going to be examined by investors like us to determine if the company is on a trajectory towards growth and profitability. And this is super important. One thing that happened in this past week was Nvidia. If you hadn't been living under a rock, you probably already know that they have the powerful graphics chips that are not only powering the computer next to me, but also powering AI like your Chat GPTs and your Metas and all this other stuff out there, where they actually saw their stock price drop by 10%. Because investors were a little bit worried about their earnings because they saw a decrease in demand for those chips and some supply chain disruptions. I feel like this is just a bump in the road for Nvidia. I mean, don't get me wrong. I feel like the last couple years it's probably been kind of overbought, but right now they are the industry leader when it comes to the chips and the silicon that you're going to see in AI. And as we know, with Facebook or Meta dropping their new AI platform and forcing it down your throat in all the Meta products from Instagram to Facebook, that demand is not going to be stopping, and compute is going to become more and more expensive. And right now Nvidia is winning that race. So I think this dip is only temporary as long as they can kind of clean up some of those supply chain issues that they've been having. Netflix also had a pretty big drop in its stock price last week as well, but that's because they stopped reporting how many subscribers it gains or losing every quarter. And to me, that kind of felt a bit dodgy because as an investor, we look at those subscriber numbers to kind of gauge the company's performance and some of the money they could make in the future, right? It's pretty simple to use that data. So I don't know why they stopped releasing those numbers, but it did cause the price to drop. But once again, they're industry leader and they're going to continue to innovate, so it's probably going to be okay, but something to keep your eye on if you're looking at earnings reports. And then if we shift over and look at the global stage, of course, oil prices are going crazy due to all the escalating tensions that we've seen. And these events can disrupt those oil prices and trigger those massive drops and changes in oil prices as we kind of look at the context of the world. But if you look at my other video, I did talk about some of the energy ETFs you can get involved in, and that will be linked above here if you're looking to actually be on the right side of the market, right? Like it's a time right now, if you look at the fear and greed index, a lot of people are a bit fearful in the market, but if you're a smart investor, you're like, okay, well, the money's got to flow to somewhere, right? I mean, don't get me wrong. You should pull out some cash right now because it's very volatile, but there's an opportunity to move over to energy and oil if you do see a spike or global tensions rise. Cybersecurity is another one to jump into as well. And the crazy thing about it, anytime it's a turbulent market, you're going to see the tech sector really take a hit because remember, that's consumer discretionary, right? So it's not something we have to have, but they make cool stuff and we like buying it. And then tech companies invest a lot in R&D, and it's all about future growth expectations when you're looking at tech. And if you see Netflix or Nvidia showing signs of slowing down with their growth or some uncertainty, you're going to see those declines. So you got to always look beyond the surface and understand what the factors are behind some of those market movements. And that's why we're really diving in and digging into that stuff on a channel like this. I don't want you to be intimidated by these earnings reports or by some of the stuff you're seeing. Like, it's super simple, right? Nvidia had some supply chain disruptions. They had a 10% drop. They had a bunch of people that were super bullish on them, so what goes up must come down, so they didn't hit earnings. Then Netflix, for whatever reason, stopped reporting those numbers, and it made people a bit uneasy because it's hard to gauge how profitable or unprofitable a company is because it really matters how much money you're making per subscriber. And if I don't know how many subscribers you're actually going to have when you're Netflix, it's hard for me to predict. So naturally that stock is going to drop. And then if we kind of look ahead to next week, we're going to have the economic indicators such as the GDP GDP or gross domestic product figures coming out, and the Fed Reserve announcements on interest rates. These indicators are definitely going to help us gauge the economy's strength and the cost of borrowing money, which is going to directly impact these investment decisions. I think I'm going to quickly jump into is kind of look at the week ahead when it comes to earnings. So as you can see, some of the big tech companies are coming out, and like I said, if we're feeling bullish in the market, we're going to see these tech companies run. And you can go to this site, this is just investing.com. You can go to anywhere and just type in next week's earnings to kind of get a gauge of what the week's going to look like. I feel like it's going to continue to be volatile, but if we look at Meta, where they've been very bullish in AI and really pushing forward. Even Zuck came out and announced their AI launch, and I think they're going to be okay on earnings. They're doing pretty good, and they have a ton of free cash flow as well to continue to invest. Amazon is the same thing. Like, I think Amazon's going to make a ton of money, because what people don't realize is Amazon isn't all about just selling you stuff from the website. Like, Amazon Web Services powers the cloud. And remember, the cloud is a huge component when it comes to AI, because it's another layer of compute power that you need to store this massive amount of data that's going to be powering your large language models. So the chip is the brain, well, cloud is the belly, right? For storing this stuff, we say it in these simplest terms. So Amazon's going to continue to do well there. But another one of those companies that has earnings coming up next week is Tesla. So with Tesla, they may not hit their numbers. I think the whole market's going to be paying attention to kind of see what Tesla's doing. As you can see, they laid off 10% of all of their staff just over this past week, and they didn't really do it in a very employee-friendly way. So they're going to be taking a lot of heat on that side, but they've also missed some deliveries in the past. So there's a lot of stuff happening with Tesla, but you got to think about like BYD and some of the other competitors over there in China when it comes to EVs are really nipping at the heels of Tesla. Because think about it, Tesla was the market leader in China, but it's an American company. So eventually those companies are going to catch up and kind of kick you off their block. And I think Tesla is seeing that. And so they're trying to find a way to compete. And what I always tell people in business, when you start competing on price, you become a commodity, and commodities win on volume, but that's a very dangerous move to go into as a business. So right now, Tesla is going to have to compete on price with some of those other Chinese EV makers to really win in that market. If I'm not mistaken, here in Australia, they've been overtaking as well, but they have a lot of competition coming up. And remember, like I said about Amazon, Amazon does the stores, they do Amazon Web Services, they do tons of stuff. Like when you look at Tesla, they have a lot of expenses that are related to AI because they use, of course, the chips in their car. You know, they buy a lot of other things from other companies that are some of these tech companies that we're talking about, but they're not the sole creator of the chips or own any of the cloud storage. I know they do have a footprint in batteries and things like that for Tesla, but I feel like they need to expand their product offering to really take advantage and to be stable as a company. Don't get me wrong, I think they're still a great company. I wouldn't count out Elon, but it's something to kind of look forward to. And we all should be paying attention to those Tesla earnings. And I might do a breakdown here and look at their free cash flow and their net income and their debt and what they're actually making, so I can actually do a better analysis on the stock by looking at the balance sheet. I'll wait until after they release their earnings, and we'll try to figure out why they hit or miss their earnings. So the key things I really want all of you paying attention to this week is going to be those tech earnings, as well as those GDP and interest rate numbers, so you can really get a gauge on what's happening in the market, and then you can have a better thesis on what stocks you should be picking, or if you should pull your money out and go back in cash. Like normally I'm against like saving money. I'd rather use VOO, which is the S&P 500, which are, for those who don't know, the top 500 companies in the stock market, as a savings account. But when interest rates are very high and you're getting like 5% risk-free interest on your money, it's nothing wrong with pulling cash out and putting it on the sidelines. But the market isn't giving us anything either way. After next week, we'll have a clearer picture on what direction we think that market is going to go in. Remember, you have the Bitcoin halving that just happened as well. And if I look at my little Bitcoin tracker, it's at 63,953 right now. So there hasn't been anything crazy happening. And like I said, Bitcoin is one of those riskier assets, and it kind of moves in tandem with tech because it's one of those discretionary things that we like to see. So keep an eye on Bitcoin and see what it's doing, just so you can kind of see what the riskier assets are doing in the marketplace. And don't forget to go to places like FinViz and look at your heat maps to see what sectors are really in vogue when you're looking to make those investments. When you understand these elements, it's not just about making money, right? It's about breaking those financial curses and freeing ourselves from living paycheck to paycheck. We want to take control of our financial destiny by educating ourselves and by making informed decisions. And for those of you who prefer a more visual guide, jump on interactive charts like TradingView. And these tools are really going to help you illustrate how stock prices react to that different economic news and make it easier for beginners to kind of grasp the concepts. Understanding the stock market is just not reserved for the select few and the filthy rich people. It's a journey we all can embark on to feel empowered and included in this game. I don't want any of you to get intimidated just because I know we can be throwing around earning reports and GDP and PPI and all this other stuff. But what you got to remember is every investor started as a beginner and every expert was once a novice. But by committing to learning and understanding the financial market, you're going to take a significant step towards your financial independence and security. Let's inspire hope for a future where financial literacy leads us to a life free from all of those financial constraints. So when we die, we can leave more behind for our family than just debt and bills. Until next time, it's your boy Michael T. Ragland. I am out. Peace.